The US now holds more Bitcoin than China and UK. The United States, the amount of Bitcoin that they hold is 198,000 Bitcoin, which is worth over $20 billion. And that's surpassing China's 190k Bitcoins and UK's 61k Bitcoin. Combined, these three governments control about nearly 450k Bitcoins, which equals to roughly 2.1% of the total supply. That's actually a huge amount. And what we're seeing right now in the space is playing out as I did tell you. If you've been around and if you're actually on my Discord, we were analyzing and I did tell you we'll see first initial spike for a couple of days, after which prices will start going down and technically both sides of the spectrum will be liquidated. All the high leverage positions will be out of the market before the next leg up. And now what I want to focus today is talking about the next Bitcoin's move. I know a lot of you are trying to say that Bitcoin has already reached its top, we're now going down, we're already in the bear market. And I know everyone wants to know the same thing. When will Bitcoin top out this cycle? But here is the truth, something that I would tell you. Every single cycle has had a different topping pattern, different topping structure. And there is no one size fits all playbook. And I'll share this chart now and I want to explain to you why you shouldn't be expecting the exact historical patterns to repeat. It's very unrealistic if you're waiting for the exact same pattern to be repeated. So if we go back to 2011, that's the first real bubble cycle. Bitcoin ran from just a few dollars to $32 in June of 2011. What drove that? Well, that was driven by early adopters, niche communities on forums like Bitcoin Talk, plus the first signs of real-world use, mainly on Silk Road. Then, market cap was tiny at that time, just a few $100 million, so very small inflows could move the price drastically. And the top was very sharp and sudden, as you can see. So no distribution, just a bubble bursting. This is what we saw. And after the topping, Bitcoin crashed over 90%. This cycle in particular, 2011, was driven by curiosity and speculation with no institutional money whatsoever. Pure speculation and curiosity, as the market cap and the price could be moved very easily at that time. If we look at 2013, this cycle, we saw a double top, which you can see over here on the chart. We can call it a double top because you can see Bitcoin had two major peaks. April 2013, it hit $260, then crashed 80%, and November of 2013, it ran up again to $1,200. At that time, back in 2013, we had countries like Cyprus that had banking crisis. People saw Bitcoin as an alternative store of value rather than keeping their money in the bank. So this is what drove, one of the factors that drove the price up. The other factor is growing media attention, made Bitcoin mainstream for the first time. This is where actually, if you've been watching my videos, I've shared this story a couple of times. Even my grandfather at that time told me to look into Bitcoin and buy some, but I was way too young to listen to his words or to concentrate. I came to realize the value of Bitcoin much later, and this is the time where the media attention was growing, and even people who were not into social media, my grandfather at that time didn't have a smartphone, they could hear about Bitcoin on the media. So this growing attention again led to more investors buying Bitcoin. And then we saw exchanges coming into the picture and giving easier access to Bitcoin. Why we would call this a double top? Because the first rally was speculative, then crashed. Later, global attention and fear about traditional banking gave Bitcoin a second life that same year. And I would say one thing, even for the future, that can trigger Bitcoin's price going much higher is the real world crisis that can trigger Bitcoin's demand, not just speculation. And one pure example is the currency debasement and the devalue of the dollar. People would see Bitcoin and gold, those two assets in particular, as a hedge against inflation and an alternative way to hold as a store of value to hold their money. I would say for the time being, we can leave these cycles behind because they were very back in the history when things were too different from where we are at right now. In 2017, that cycle was the parabolic retail mania. Bitcoin soared from under $1,000 to $20,000 in just a year. And what drove that? Well, Ethereum, the so-called initial coin offerings. People needed Bitcoin to buy into those projects. So then retail came into the picture, mainstream media coverage, different big corporations talking about Bitcoin. Everyone from your barber to your uncle was talking about Bitcoin and about crypto in 2017. But at that time, there was still lack of institutional infrastructure. ETFs, futures, regulated on-ramps didn't really exist yet at that time. So the top was a classic blow-off, as you can see on this chart. Just vertical growth, then 70% crash within weeks. And that was, as I said, purely retail-driven crazy mania that burnt out very quickly. And then moving on to 2021, which is the most recent cycle, this is where institutions and macro factors started playing a big role in crypto. Bitcoin reached 64,000 in April, corrected, then hit a second peak of 69,000 in November. What drove the movement of Bitcoin this time? That was institutional adoption. Tesla, MicroStrategy, the launch of Bitcoin future ETFs, money printing, and low interest rates were actually those macro factors that we're talking about as well. The COVID stimulus created massive liquidity with the lower interest rates and the money printing. And that large part of it came into crypto and boosted the price of all assets. And there was a growing belief in Bitcoin as a hedge against inflation at that time, which continues up to right now and will continue for the future as well. That's already proven. Why we saw the double top? Because the April rally, the initial April rally was fueled by institutional hype and ETF optimism. After the crash in May, China, mining ban, over-leveraging crypto, and all those kind of factors, Bitcoin recovered but couldn't build some momentum. Then macro changed. The Fed started signaling rate hikes, global liquidity started tightening. And then later in that year, as we said, we saw Bitcoin reaching to new all-time high. So for the first time in this cycle, Bitcoin was heavily influenced by macro policy, not just crypto native speculation. And this is applicable to the cycle that we're into right now. What I'm getting into, what I want to get across to you is that each topping moment looked different because the drivers were very different. In 2011, niche speculation. In 2013, banking crisis and media hype. In 2017, the initial coin offerings mania and retail investors, the fear of missing out. In 2021 was the institutional adoption and macro liquidity. This current cycle that we're seeing right now after the halving event, and as you can see, actually each cycle is marked by the Bitcoin halving event, which happens to coincide with the elections in the US. That actually drives the start of the bull run in general. And it's part of the cycle. And each cycle it happens to be around 4 years. And after the halving event, it takes, historically what we see on this chart, it's around 350 to 550 days to see Bitcoin topping. But what I just said, those dates, those numbers are just for guidance. And the reasons that I'm just explaining that each cycle has a different driver is what is stopping us to apply these numbers exactly to the next cycles or look into each cycle in the same way. We shouldn't be doing that. We know that crypto and patterns, they rhyme, but we can't say that history exactly repeats one-to-one. So in this current cycle, we've got spot ETFs that are bringing a lot of money into this space. We have the halving supply shock, we have liquidity trends tied up to Federal Reserve policy. We are seeing global adoption, Bitcoin as reserve assets. We see stable coins being more and more used and applicable nowadays. A lot of people are using stable coins to hold their savings with. This means that the topping process will likely look different again this cycle. Maybe longer distribution, maybe sharper exit, depending on how macro plays out. And the main takeaway here is that there is no standard topping model to copy. The market evolves each cycle, and that's for sure. We can only use the historical information to try and analyze the current status, but we can't apply it one-to-one and expect the exact same results. I can tell you that for sure. I personally see that we would reach at least 150 as a target this year or in early Q1 before we actually enter the bear market. And one thing that I can tell you for sure, which is in my opinion very different to the previous cycles, because in previous cycles we've seen Bitcoin's value dropping by 80-90%. This time I think this drop would be very limited because we have the institutional adoption here. I wouldn't see Bitcoin dropping more than 30% in this cycle, But as I said, just be prepared for a surprise. Each cycle, something different happens. And as I say, I see Bitcoin hitting the 150K level by the end of this year or potentially in early 2026. And in the bear market, I wouldn't personally see Bitcoin dropping with more than 30% of its value. And that's because every time something different drives Bitcoin's price, and that changes with every single cycle, as I just explained to you. So if you're waiting for a repeat of 2017's blow off or 2021's double top, you'll probably miss it if you're waiting for the exact same pattern. I can tell you that you would miss the exit point. So instead of searching, let's say, for the perfect top signal, focus on liquidity, focus on the macro factors, focus on macro policy, and having a clear profit-taking plan. That's a must. And if you want to see when I'm selling, when I'm buying, feel free to join Discord. You would find those signals over there and breakdowns and guidance on what to do.